What is up, family? All right, so it's Thursday. It's getting late in the day. Days go by quickly. A lot going on today. We down 500 points in the Dow, down 500 points in the NASDAQ. Dang. That is a lot to take. I just saw that. Damn! Wow. All right. Getting a little volatility action here. So I know. No, this is not a victory lap. No. Long ways away from that. I'm telling you what's going to happen to the stock market. The Fed giveth and the Fed taketh away. That's what's happening. There's people who believe that the Fed is going to curtail. They're going to come back and say, you know what? We're not going to pull the rug after all. If the Fed does that, everything will go nuts again. Stocks will fly high again. Crypto, alts, everything will go nuts again. There's people who are predicting this. A lot of people also believe, I'm going to get to this, what's going on in Ukraine. I got buddies drilling in the mountains right now. You know where they're headed. That this is essentially the front for a reason to have to ease on policy. We'll see. There's the jury's out on that. But what I do want to talk about today is what's going on with stocks. I want to show you something I've been telling you about for a long time. A lot of people think that I'm a conspiracy theorist, something like that. Not true at all. I like to dig, and I don't think anyone is above being bad. That's one thing people have got to realize. You can't just trust people. You've got to research. Some people call it trust but verify. Also going to show you this sneak peek. Bitcoin first. If you haven't seen this, this is a report from Fidelity. Yeah, that's right, Fidelity. Multi-trillion-dollar asset manager Fidelity about Bitcoin. They published this report. I've been seeing excerpts from it posted all over social media. I've got my hands on it, and wow, Fidelity has been buying Bitcoin, accumulating Bitcoin since 2014. Meanwhile, they were telling you to stay away. They're saying, no. I remember the first time I logged on just to even buy Grayscale Bitcoin Trust, which was a publicly traded stock. It's a trust, but you can buy the stock, GBTC. And they're like, no, you can't. You have to do this. No, I mean, they were keeping people away from it. Now we know why. They were buying it. I'm going to show you a little something about that. If we get there, we'll do interest rates. We're definitely going to look at mortgage bonds. And in fact, let's start here. This is the mortgage bond chart. Start here. Let's take a look at things. Dow down 518 points today. S&P at over 100 points, 111 today. NASDAQ down 538 points. Russell down 38 points. Big down stuff here. What's going on with oil? Oil's at $90. We knew that would happen. We've been talking about that for a long time. I did get out of my oil position because I had something else I want to get into, and we had such a nice profit. I booked it. I still think it goes to $100, but I had money in hand, and I had what I believe to be as a better ROI. Gold still at 1,800. Never changes. It's 1780 to 1820. That's what gold is these days. Bitcoin down a little bit today. Crypto's just kind of down overall a little bit, just sort of lagging heaviness in crypto and mortgage bonds. So we got kind of what we wanted to see. Now, this is, by the way, on the heels of, and I should go ahead and get my stuff out of the way. Derrick Evans, NMLS 155010. Call or text me if you want to buy or refi. Whoa. You can also email me. That works too. All right, let's get that out of the way. Let's get me out of the way. Let's talk about this. Amazon shares go bananas today. How does Amazon, a stock that's trading for like $3,500, go up 20% in the day? Well, they reported a blowout quarter. Blowout quarter. And, Amazon, I've been watching the stuff that they've been pulling. For me personally, you check this on the stuff that you order from Amazon. So like I find something I really like these vitamins. Oh, I really like these vitamins. So I order them 3 or 4 times. And then before you know it, they're not showing up anymore when I search for them on Amazon. Instead, there's Amazon's choice. So I think a lot of what they're doing is somewhat shady. A lot of what Apple is doing is pretty shady too, to be honest with you, about how they create these revenue streams. But Amazon is essentially working its way toward being just a provider and a manufacturer of everything. Imagine how much money Jeff Bezos made today with the stock going up 18% like that. My goodness. Can you imagine? Had to be tens of billions just today. It's crazy. So Amazon smashes it. Facebook takes it in the face. Stock down 23%. Now, what happened here to Facebook, because the revenue actually beat estimates with Facebook stock. And I've been telling you about Facebook stock because this is a pure play on the metaverse. If you want to invest in the metaverse, you want to buy Facebook stock, in my opinion. A lot of these things like crypto, NFTs, metaverse, these things all feel like .com, where people know it's the future, but we don't really know what to bet on. If you were around during the .com era, you will remember that a bunch of these companies went public. They were supposed to be internet companies. They had a website. That was all we knew. People went and they bought those stocks because they thought they were investing in the internet. They didn't realize they were investing in a company that was supposedly going to use the internet to supposedly make money one day. So a lot of people were right. Their investment thesis was correct. The internet is going to be huge, but their bets were not on the internet, even though they thought it was. I think that's going to happen with a lot of people who are trying to invest in the metaverse. You're going to be right. The metaverse is going to be huge. It might be 5 years from now. It might be 10 years from now. It's going to be huge. But if you pick the wrong horse, you could still lose money. There's nothing more frustrating. I mean, nothing more frustrating than when you're right about your investment thesis and you still lose money because you picked the wrong horse. Well, imagine if back in the .com era, in that bubble-licious period, imagine if you could have bought stock in the internet, just stock in the internet itself. Everything that flows through the internet is going to make you money. That would have been pretty sick, right? That would be what we call a pure play or a pure bet. That didn't exist. Well, with the metaverse, it does exist. You can actually buy stock in the company that owns the metaverse completely, owns it 100%. They have other businesses too, also doing well, as evidenced by the quarter. What people are stuck on here is the $10 billion losses from the Reality Labs, which is one of the spinoffs of Facebook, one of the companies that they own, which is building the metaverse. I told you, he's got 10,000 people plus working on this. It's going to take years. That's why I said don't FOMO into it. Don't feel like you missed it. Don't feel like you have to go rush and pile a bunch of money in. It's going to take time, and it's going to cost a lot of money, and there's really only one company that could do this, that could pull this off. They need a CEO who is absolutely guns blazing, gung-ho about it. They've got that with Zuck. He's going after this like it was Facebook. He has the same look in his eyes, I imagine, like he did when he had the Facebook idea. He knew he needed to get it to market. He knew he needed to get it there quickly. He needed to be first. He needed to be best. We had MySpace back in the day, but as you remember, that was a very lazy sort of, non-corporatized, non-monetized type model. In his mind, he knew how to make Facebook worth money because he understood data. Metaverse is the same thing, just on a whole new level, a very expansive level, a very unique level. And him going full blast towards this and just burning through cash, I'm cool with it. I'm cool with it because guess what? I bought more Facebook stock today. I'm easing in. I'm buying some every month. Every month. I've got a whole fund set aside for metaverse investment. I'm buying Facebook stock. I bought some more today. I appreciate the discount. I want him to floor it because it's still going to take years to get there. So you have a pure play for the metaverse. You can literally buy the company that owns the metaverse. Imagine if you'd been able to do that with the internet. That's where we're at. So I see this as a huge opportunity, even though it's down 27%. Give me more. Give me more. I'll take it. So that's what's going on here. Oh, I wanted to show you this. This is great. So remember when I told you that a lot of the news that you will see is paid news. They publish it as though it were editorial, but it's really advertorial is what it's called. If you work at the news station, they'll call it advertorial. But they a lot of times won't disclose that, or they'll put it at the very end, or they'll put it in a really grayed out writing, and you don't see it. Well, look at this. Kramer's Investing Club. We're exiting. We're getting out of Union Pacific Railroads, considering better risk-reward stocks. Look at this. This is the same website. Now, one of the reasons I get all of my news from the same website is because I know the beast. I understand where their biases are. I understand how the pay-for-play thing works. And so I'm able to decode it because I understand the language. If you get your information from all these different websites, it's hard to figure out who's doing what, saying what, when, where. You may have a place that you believe in, that you like, but then you get a link from somewhere else and you give it the same credo. It may not have earned that. So that's the reason why I use the same site. We're exiting Union Pacific. Even a picture of a train here. Watch this. Same website, same day, almost same time. Why freight railroads are so successful in the U.S. It's not talking about stocks. They're being careful. Look at that. Why freight railroads are so successful. They're so successful that Kramer says, we're getting out. Isn't that interesting? That was 11:54 a.m. This was at 8 a.m. So 4 hours later, they said, yep, we're getting out. Here's why they're so successful. We're out. Just wanted to show you that. It's not a victory lap. I'm just telling you. There's things there that happen. I know how these things work. I'm explaining it to you because I want you to understand it. This is victory lap. Borrowers rush to get the last of the low mortgage rates with refinances jumping 18%. Remember what I told you? When rates go up, what will happen initially is that people will rush in to try to get it. There will be a frenzy, which we're seeing. It's happening again. Not like spring of last year, but it's happening again. There's a frenzy taking place, and it's not just, and you wouldn't, there aren't big numbers that are year over year or month over month up on purchases because the inventory is so low. You're just not seeing that, but you're going to see prices. You're going to see it with prices. Refinances jumping after rates go up is just proof that the frenzy has begun. This is what's happening. Here we go. Okay, we talked about Facebook. Ukraine has said, hey, listen, we're talking about a full-scale war here and serious tragedy if Russia attacks. The Ukrainians are not to be messed with. I don't know if you know anyone from Ukraine. For a long time, I worked for a couple that was from the Ukraine. They had part of their business in the Ukraine, and they're tough. They're tough. They're tough folks. I imagine whoever leads that country is going to be tough, kind of like Putin in Russia. Like the Russians are tough, very tough individuals. All of them. So yeah, I don't know. This is concerning, especially the mixed messages we're getting. This is something to keep an eye on. This could cause problems. Okay, and then here, just looking at mortgage bonds today, so tying all this together, we got what we really needed to help mortgage bonds, which is a sell-off in stocks. Okay, that helps. It helps make bonds a little bit more attractive. If you know the Dow is down 2%, but I can park my money in these bonds for the meantime and get something. That's something that will happen. However, today we lost 31 basis points. I will tell you, though, it was bad. At one point today, we were down 68 basis points down here at the low, and we broke through that support level. But as you can see, we closed back up here. So I get myself out of the way. Hold on. We closed back up here. So, we're still in the channel. Now, overall, if we look at what's been happening with mortgage bonds, we'll just zoom out for a second here. Let's go back to September. You can see the overall trajectory has just been lower. Mortgage bond prices going lower, which means interest rates going higher, right? So the yield has to increase in order to attract investors. And now we're in this channel here, which isn't bad. If we can stay in this channel, that's, I think, our best case scenario. And it's not a bad scenario. If we can stay right here, rates aren't too terrible right now. I mean, you're seeing we're kind of getting out of the twos now, and we're really kind of in the threes pretty much for everybody. But threes aren't bad. I remember having a conversation with my dad one time and being like, and this was after like multiple refinance booms, telling him that rates were going to go to 3%. I believe they were going to go to 3%. And there was going to be another refinance boom. That's a long time ago. I remember saying that. Now we're talking about rates have gone up to 3%. So rates are still good, but we need them to hang on here. I do believe it was the Fed that was in buying here. If we kind of zoom into where we are now, I do think it was the Fed. I think we had a big buy here because the action was very ugly very early. But notice how Barry, who runs this website here, mbshighway.com, Barry Beebe, did not issue a lock alert today. Isn't that interesting? Normally like 15, 20 basis points, you see a move. If he's expecting a reprice, he'll issue a lock alert. Didn't happen today. What does Barry know? Come on, Barry. Tell us what's going on, man. So you got this range here. Hopefully we can stay here. Notice what happened. We entered the range, got killed, rallied, killed, rallied, killed. What's next? I don't know. We either dump and it just goes parabolically horrible, which is something I'm getting prepared for. And I think everyone should. Bonds, let's be honest with ourselves right now. Bonds right now are negative yielding risk assets. We have 7% inflation. You have, let's say, 2.5% yield on this bond. That's a negative 4.5% guaranteed return with risk. It's not good. If the bond market explodes like a bubble, which it could. Remember, the Fed is starting to exit slowly. They're slowly pulling the binky out of the bond market mouth. As that happens, rates will go up a lot. There could have real serious implications. So we need to be careful here. We need to understand what's going on here. They could not just crush stocks, could completely eliminate refinance activity, could make things more difficult for home buyers. There's a lot of things that could happen there. So either we sort of rally back up and we stay in this range, right? Or I think it just dive bombs. There's no scenario that I have for you right now where bonds rally and rates drop. That doesn't really exist right now, except for this situation here. If the Fed comes out and says, you know what, we need to not tighten things up right now. We need, there's global tension. We need to keep things liquid. We're going to just kind of, we'll raise rates one time and then we're going to kind of sit back and see what happens. We're not going to say we're going to raise them anymore. Then maybe you get a rally. Or maybe they say, hey, we are going to raise rates, but we're going to keep the bond purchasing program intact. Then maybe we get a rally. So it'd have to be something sort of out of left field if it's going to happen. And I don't see it happening. This right here is a link you're going to want to check out. This is probably the most revealing thing that has happened right now for Bitcoin in its history, where Fidelity basically says, and keep in mind who's writing here, Director of Research for Fidelity, and then a research analyst published this. Bitcoin first. The stuff in here is bonkers. Here's your executive summary. They tell you exactly what they believe here. There's graphs in here. Why we believe Bitcoin is best understood as a monetary good. They compare it to gold and fiat currency. Just dramatically better than both. They are not just explaining Bitcoin, but they're explaining why it has such value. And they also claim in here that they've been accumulating it since 2014. Some really cool graphs in here, some really good information. I want you to check this out if you're interested in learning more about Bitcoin, whether you have invested in it or not. If you want to understand it, what the future looks like, it looks like Bitcoin. Remember when we showed you Goldman Sachs? They had their list of cryptocurrencies. They listed only one pure cryptocurrency, as they said, quote unquote, pure. That was Bitcoin. So there's some things there on the Bitcoin front. As we're still sort of trading this rally, we have gotten outside of the two smaller trends that we were working on. And so because we're outside of those now, I've removed those. Now we just have the two. We have the intermediate macro downtrend right here that we've been going on for quite some time. The only thing that I could say is bullish about this downtrend, you're Bitcoin maxi when you talk about how bullish a downtrend is if you look at when we have touched this downtrend, it has just exploded lower in the past. Okay. And if we go back here, last time we touched it here, explodes lower, right? Here, explodes lower. Most recently, we just touched this. Was that yesterday? Yeah, it was yesterday. And we haven't really seen an explosion lower. We went lower off of it. But we can see that sort of sentiment is changing there. If you just look at this little triangle right here, it looks like Bitcoin wants to go higher. It looks like Bitcoin is light. It looks like it wants to go higher. If it can break this downtrend, that would be a great intermediate win. We'll see what happens. We'll see what happens. But that's what we're looking for here. We do have support down here in the low 30s for the macro channel trend, which is best seen on a more long-term chart. You can kind of see these two trend lines are parallel, exactly parallel, and that's something. And they perfectly match up for support. So that's the underneath support that we have here, and then this is the more intermediate macro downtrend that we're dealing with. So a break from that might be all that Bitcoin needs to stage a rally. And, it also, I mean, I find it to be very bullish as well when you have stock market getting beat up really bad and you have Bitcoin kind of going sideways and not really moving a whole lot. To me, that's also a good sign for Bitcoin. So we'll see what happens with Bitcoin. Right now, there's potential for some somewhat ugly stuff to go on. I'm just going to be honest with you here. And I really hope that none of it happens. But we've got war in the news. We've got crazy stuff happening in the financial markets. We've got entirely new financial systems like the crypto space, which I have to admit, I mean, even though I'm a big fan of Bitcoin and I own Ethereum and a few other altcoins, it feels bubbly. It feels like a lot of these coins aren't going to make it in the end. I feel like a lot of people are going to lose a lot of money there. Man, I just feel like Bitcoin is the safe bet there. If you like crypto, Bitcoin is the safe bet. Ethereum, I've used Ethereum a lot in practice, and it's very expensive. I just don't see why Ethereum is so popular. I feel like Cardano is dramatically better, so much less expensive, really the same type of technology, just not a lot built on top of Cardano yet, but that should be happening. So I feel like in the crypto space, there's going to be this handful of winners that really, really win, and there's going to be just a truckload of losers. I really hope I'm wrong about that, but that's just what it feels like. And even on a day where Amazon is up 20%, the NASDAQ is down almost 4%. So there's a lot of red in there. There's a lot of pain in there. Expect this to continue. Be prepared for this to continue. Listen, if you're a perma bull or a DCAer, it's okay to, sell some and then schedule to buy back in if you believe the market's going to go down. If you believe the market's going to go down, it's okay to sell some and buy back in. If you're wrong, then you'll end up paying up. If you're right, then you'll end up averaging lower. So it's okay to do that. It's also okay to just sit and diamond hands it. But if the Fed continues the course that they have set, we're definitely going to see lower prices in stocks. All right. That's it for today, guys. If you need me for anything, give me a shout. Call, text, email. I'll be here for you. Have a great night, and I'll talk to you soon.